Hi everyone. Today we will have a brief discussion on taxability of ESOP, RSU and ESPP in India. As we all know that these perquisites have become common in India as a lot of foreign companies have set up their subsidiaries in India. But what is commonly seen is that the Indian residents either fail to disclose these perquisites in their tax return, or if the same is disclosed, then they fail to claim the tax credit of the tax paid outside India due to lack of knowledge. As it is well said, ignorance of the law is no excuse. Therefore, here I will give you a quick overview about these perquisites, their taxability in India, when foreign tax credit can be claimed, its disclosure in return, and consequences of non-disclosure. Let's first discuss about these perquisites. Employee stock option plan. It allows an employee to purchase equity shares of the company at a future date and at a predetermined price. It's a right and not an obligation. Restricted stock units. These are stock with zero investment but with condition. RSUs are a good means for an employer to ensure that their employees stick with them for the long term. RSUs are sometimes granted in a phased manner, such as 25% RSUs every year. Employee share purchase plan. In this kind of plan, the employee is required to contribute a small portion of his or her salary towards the scheme every month. It's kind of a SIP. This accumulated money is used to purchase stock from a company at a discounted price. Now let's move towards their taxability. We are aware that for an Indian resident, his or her global income is taxable. Now these benefits are taxed at two stages in India. Generally at the time of exercise as a perquisite and at the time of sale by employee as a capital gain. Taxability outside India. Generally the company, while granting stocks, withholds certain number of shares to meet the tax liability and the balance is given to the employee. This option is called sell to cover. For example, if 100 RSUs are vested, then you would get only 70 stocks in your account due to taxation. That is 30% of 100 is taken as tax. Now this might create a situation of double taxation on these perquisite receipts, as these benefits have also suffered tax in foreign country. And we all know that no income should be taxed twice. Therefore, depending upon the relevant country and its treaty with India, the Indian resident should avail foreign tax credit of taxes paid outside India. For that, Form 67 is required to be filed before filing an income tax return. And in order to do so, we should have the following documents or information in hand. These are complete details of these perquisites, that is vested and sold during the year, Form 12BA, foreign country tax certificate of tax deducted, such as Form 1042S is made available to employee in USA, shares holding statement and taxpayer identification number or unique number. Now since we have claimed the credit, it's time to disclose the same in your return. In your income tax return, the disclosures need to be made under Schedule FA, used to disclose your foreign holdings, Schedule FSI, here foreign sourced income needs to be reported, and Schedule TR, to report details of taxes paid in the foreign country. Yuppie! You have claimed your credit and have duly filed your return. Not just we need to wait for the refunds. Or, wait. In case there is a failure to disclose or there is a wrong disclosure of such foreign income and assets, then the consequences are rigorous. The penalties can be imposed up to 3 times of tax amount. Fine up to 10 lakh can be imposed, and prosecution of up to 7 years can be imposed, depending upon the failure under the Black Money Act. Given the stringent penal consequences for not reporting or incorrect reporting, it is advisable to correctly report all foreign income and assets in the income tax return and properly claim your right, that is the tax credits. As it is said, the law helps those who watch, not those who sleep. By this, I conclude my video. Hope you guys got a glimpse about these perquisites from legal and procedural point of view. Thank you.